Good afternoon, everyone. Anthony Alaka with Torrey Hills Capital. Welcome to the Millennial Precious Metals webcast from March 8th, 2023. Hope everyone's doing well. Thanks for taking the time to join our virtual lunch today. Very excited to have Jason Banducci from Millennial Precious Metals on with us to discuss the recent at-market merger with Integra Resources, as well as the concurrent financing and strategic investment by Wheaton Precious Metals. The management team has been very busy over the last few months getting this deal done, and the combination of Integra and Millennial will create one of the largest precious metals development and exploration companies in the Great Basin. The combined company will also have a significantly strengthened balance sheet, increased scale, and improved capital market presence with an NYSE listing. And as you'll see during the presentation, the combined company will be trading at a discount to its peers. So we feel there's plenty of upside as the company continues to execute its strategy. As I mentioned earlier, with us today to discuss the merger is Jason Banducci, who is the VP of Corporate Development for Millennial Precious Metals. Obviously, congratulations is in order. Thanks for taking the time to update our viewers on this merger with Integra Resources. It's an exciting time for shareholders, and I'm happy to have you on with us to discuss the company's future. But before we get started, I just want to mention, if our viewers have questions during the presentation, type it into the Q&A or chat box. We'll make sure it gets answered. If you can't do that, click the raise your hand icon, and I will unmute your microphone and you can ask directly. So with that, Jason, I'm going to turn it over to you. The floor is yours.
Awesome. Thanks, Anthony. And thanks to everyone that joined. I'm going to walk through the deck, which I'm sure everyone's familiar with. And I'll kind of stop at a couple points throughout the deck where we can answer any questions on the go, and then we'll leave some time at the end for a more formal Q&A session. But we're excited, really excited to announce the transaction last Monday, and a lot of hard work and a lot of thought went into deciding to go forward with a transaction like this. And I was telling Anthony, my background is on the investment banking side, so I spent the last 5 years helping put companies together and helping to facilitate M&A. And I can honestly say that this is one of the most accretive and exciting and honestly truly complementary transactions that I've ever worked on. So it was exciting to work on. It's going to be a busy next few months to get everything closed up, but I'm very happy to be a part of the pro forma company, and I do think we're going to be able to provide investors with a value proposition and investment vehicle that's unmatched in the sector right now. So we're really excited to talk about this today and to deliver this in the next few months. So I will be making forward-looking statements. So I'll urge you to read this slide on our presentation, and it can also be found on both the Millennial and the Integra websites. And so, what I'm going to highlight today and what I do want to focus on is more the high-level transaction versus going into I don't want to go into in-depth asset discussions around Millennial or Integra's assets, other than the reasoning behind the transaction and why we think it's complementary. I've spent enough time presenting to you guys in the past, and so if you want to do an in-depth dive on Millennial's assets, there's lots of videos, and obviously our standalone corporate presentations available on the website. And if anyone wants to do a follow-up discussion on the Millennial side or really on anything, we pride ourselves on always trying to make ourselves available to speak to shareholders. You can book a meeting with myself or our CEO, Jason Kosik, right through the website. So to take a step back, we were calling this project Jackpot. We think that, that represents the opportunity here. It's a truly unique opportunity to put two companies and two teams together that have complementary assets at various stages of development and teams that, again, offer very different things. And I think, it's very rare to be able to do, especially at this point in the market. And when we take a step back and look at what we think the opportunity is, number one, it creates significant scale. It does create one of the largest precious metals exploration and development companies focused in the Great Basin. It's high quality assets, but the key thing is it's at different stages, right? You've got Delamar, which is the closest to production, followed closely by Wildcat and Mountain View. And then you have this amazing portfolio of exploration stage projects that, that provide this optionality that a lot of single asset development companies just don't have. And I think, to that end, what we like about this transaction is it really doesn't change any of the timelines or deliverables from the Millennial side, right? We're still going to move, ahead full speed with developing, drilling and permitting Wildcat and Mountain View, because Delamar is already at that one step ahead. And then, we're still going to continue to look to surface value from Red Canyon and all those other projects in the portfolio that we think provides that blue sky upside. To speak to that, we've got a really robust initial resource inventory, right? 2.6 million ounces of gold, 127 million ounces of silver. So that makes us one of the largest resource holders in this part of the US that's not controlled by a major mining company. And as you know, in this market, you got to stay relevant, and scale helps you do that. And it positions you better for when the market does turn and that capital flows down from the seniors. You can't ignore this name anymore. We are going to be the go-to name in the US if you want that high levered exposure to gold and silver development with the exploration upside. And that kind of leads me to my next point. We're putting together a portfolio of projects. It's not just 1 + 1. We have a pipeline of projects in the Great Basin with significant scarcity value. There's very few of these 1 million ounce potential projects available. And what we like about it is the staged development strategy. So and I'll walk through it in a bit more detail later, but when you have Delamar go into the permitting stage or the trough of the Lassonde curve, we're going to shift the focus back to Wildcat and Mountain View, show exploration growth and drilling, so you don't have that dip, you don't lose the excitement in the story. And then on top of that, we have Red Canyon, Dune, Ocelot, Eden, Mar, and Cerro Colorado to kind of round out the portfolio. The next thing we love about it is it creates a platform for growth, and that's not just production growth, but even in the next year, through some of the key catalysts, we see potential to grow the existing resource at Delamar, Wildcat, and Mountain View by 1 million ounces, and that's of oxide heap leachable material. And again, there's not too many other projects that we've come across, and we've done our homework in the US that can provide that sort of near-term resource growth. And then, the next step, and this was always part of the strategy for Millennial, was we want to be a producing company, a multi-asset production company in the US focused on near surface heap leachable ounces. And, by having 3 assets to do that, you can scale your growth to, once Delamar, Wildcat, and Mountain View are in production, you can push over 230,000 ounces of production in the Great Basin. And we'll walk through the comps, but that's $1 billion company. And so, what that also allows us to do by staging the development is that you can use cash flow from Delamar to offset developmental costs at Wildcat, and then same from Delamar and Wildcat to offset costs at Mountain View. So it's really unique to have those assets at varying levels of development, and to be able to do that with a pipeline of projects. It just really de-risk it. It really de-risks from an asset development perspective. The next big point is the right team, and this should really be almost the number one point. We think that we're putting together 2 of the leading junior gold development, exploration, and development teams, and again, very complementary in the sense that you've got George, who will be leading the company, who is the CEO of Integra, who's got a long history in the industry. He's one of the veterans in the industry as far as this goes, and he's going to be spending all of his time focused on getting the mining permit at Delamar. And then you've got our CEO, Millennial CEO, Jason Kosik, who's going to be focused more on the capital markets and on the Nevada assets, and just going to be spending more of his time traveling around, selling the story, speaking to shareholders, speaking to stakeholders, so that George can focus on getting that mining permit. And the same thing that we love is that Integra has done a phenomenal job over there. They've built an amazing team. They've done a great job de-risking Delamar. And what we love as Millennial shareholders is that as soon as Delamar goes into that permitting pipeline, that whole team is going to shift their focus on Wildcat and Mountain View, right? Whereas if it was Millennial standalone, we would have to go hire a new team to do that. So, just as hard as it is to find good assets in the US or globally, it's just as hard to find good team members. And we get access to that, industry leading team at Integra, which we really like. And the last point I want to touch on is the financial strength, right? What we're going to do, or we've launched a concurrent equity offering, which will be closing next week. And that comes alongside a 9.9 pro forma investment from Wheaton Precious Metals, which we think, provides a lot of, it really justifies everything that we're doing. They've come through, they love the projects. They've gone through both data rooms, done their full due diligence. And, we're talking about one of the leading mining financing stream and royalty companies in the world. So to have them do a deep dive on Delamar, Wildcat, Mountain View, all the exploration projects, and to write us a check to go to 9.9 of the pro forma company in exchange for a ROFR, we think that was amazing project validation. And again, it provides us a little bit of validation on our strategy and what we're trying to achieve here. And another thing it does is it creates a pathway to project financing. And again, the goal here is to get projects into a permitting pipeline as fast as we can, because that's where you get your re-rate from trading at 0.1 times NAV to 0.5, 6, 7, 8 times NAV, which in our case, you're talking about double, tripling, quadrupling the value of the company. And it's no surprise that permitted ounces traded at a much higher multiple than deposits that don't have a permit. In the financing, we saw support from all of our major shareholders across, we're lucky we've got shareholders. Some of the significant shareholders of Millennial also hold significant positions in Integra. And so they were the ones who we brought this transaction to initially, and they loved it and we're there to support it. And they put their money where their mouth is and supported in the concurrent financing. So quickly, I'll just touch on the management team. As I mentioned, George will be moving to executive chair. My former partner, Jason Kossik's going to be moving to the president and CEO seat. We get to take advantage of this incredible team that Integra's put together. You've got Andre, who's a CFO, who's, best in the business. And I've been lucky enough to work very closely with her, putting this transaction together. And I can honestly say, one of the most talented CFOs I've ever worked with. You've got Tim Arnold, Max on the exploration side. Josh is going to be focused more on IR and corporate development, myself on capital markets. And then we get to bring over Raphael, who is our superstar VP of exploration. And then you've also got Mark, who's with Integra. So we've got a really well-rounded team. And we think we've got the team and the assets in place to create a $1 billion company. So looking back to the portfolio, and I think this is the crux of how this all came together. All of a sudden you are a major player in the Great Basin. And what we love about this is you've got assets across different stages of development, right? So up here, first in line, we've got Delamar oxide, and that's going to be moving into a production pipeline. Then again, the team's going to shift their focus back to Wildcat and Mountain View to get them in line as well. And, this is the beauty of diversification. If there's a hiccup at Delamar, then the focus 100% shifts to Wildcat and Mountain View. So we've got the three sort of key horses in the race here towards production. And then you also have this robust portfolio on the exploration side that, this is going to be one of my mandates when we first once we close the transaction to start working as one unified team. I'm going to be spending a lot of time trying to surface value from this exploration portfolio. So whether we look at JVs, again, Red Canyon still at the front of the list there, and we know how great that asset is. And I think that's, it brings a ton of value to this exploration stage portfolio, and it rounds out the entire portfolio because we've got all those assets at different stages that we can move forward and shift focus depending on what's going on in the market. When Delamar is going into permitting, again, the focus is going to be on drilling out Wildcat, Mountain View, and then back to Red Canyon. So this is what we love most about this transaction.
Hey, Jason, notice in the small print, Millennial holds an option to acquire Red Canyon and Cerro Colorado in the future. How would that work?
So basically the option gets transferred, right? Because the options at basically at the asset level, it's of the sub company that owns or that holds the option. So nothing changes. Like that option still exists, and you can go back in our disclosure to understand exactly what the payments are and what the stages of those options are, but nothing changes. We continue to hold those options, and we will continue to do our work. And at that point of option exercise, we'll decide if we want to move forward. We've already reached the minimum work commitments at Red Canyon and Cerro Colorado, so it's at our option. And again, we consider it one of our assets.
Yeah, and one other question that came in queue.
Sure.
The combined company's name and ticker symbol is going to remain Integra, correct?
Yes, it is going to be Integra. We got to give it to the Integra team. They've done a phenomenal job, and it's been a really challenging market. But we still think that brand holds a lot of equity, and they've done a great job. And we're actually gonna look at changing the name to Integra Precious Metals, and then we were doing all the work to understand what's involved in a name change, and we're like, you know what, let's just keep it Integra Resources.
Yep, makes sense. And the ticker will stay the same as well, correct?
Yeah, exactly. And again, for any of you tuning in from the US, you'll have the NYSE listing, which we're really excited about.
Yeah, for sure. Thanks.
Is there anything else here, or should I
You can keep going. Yep, that was it for now.
Sounds good. So I won't spend too much time here. It just goes through some of the key transaction terms. The thing I will touch on is just the timing. We're expecting to have everything closed by end of April. I think the shareholder votes end of April, and we'll have it closed by May. And that lines up really well with some of the key catalysts that we're looking to execute on, and I'll get to that later. But we really like how this all came together, and the goal was to announce it by BMO. We got that done, and now the expectation is to close it by May, and in June to come out right out of the gate with some really good news flow out of both the Integra and Millennial assets.
Is there any reason to think that it wouldn't close? Like, is it like something that an additional discovery that could be made, as you go through this, or you think this is pretty smooth sailing from here?
Yeah, I think this is pretty smooth. Again, I've probably worked on 50 of these, and this one's pretty straightforward. Again, it's only one shareholder vote on the Millennial side, and about 40 shareholders of Millennial owning 40% of the stock are all involved in the transaction financing. So they'll be voting obviously in favor. Management owns 9-10% of stock. We're obviously voting in favor. So again, you never know, but we've done everything that we can, in crafting the transaction, and we're already going through drafts of the circular. So, you've got two teams that have done this before, and we're doing everything in our power to make sure this moves smoothly, and we don't really foresee any issues.
Yeah. So one question did just come in. Why is Integra doing a 2.5-for-1 share consolidation right after the merger?
So the idea is, again, you very rarely have the opportunity to do these consolidations. And I know some people, some people like them, some people don't. For us, given the stages of the company and given that we're going to have to do project financing, the idea is just to clean it up, tighten the structure.
Mhm.
It gives us a little bit of a buffer zone on the minimum share price requirement for the NYSE. And so for those reasons, we thought it was a prudent decision just to do that consolidation, gives us a bit of wiggle room and tightens things up to kind of drive on with the pro forma company.
Another question, what happens to Millennial Warrants?
So Millennial Warrants will still exist. They'll get repriced and they'll get reissued in accordance to this share exchange ratio here. And so this will all be outlined. Again, all these, like the minutia and the details surrounding the transaction will all be outlined in the management information circular.
Yep.
Which is going to be, again, like we're going through drafts, and the goal is to mail everything and to send that all out and publish it in March. I think it'll happen in March.
Perfect. Thanks.
No problem. So, we just touched on a bit of this, but I think, we're just showing a bit of a breakdown of the cap table, options, warrants, RSUs, DSUs, and fully diluted shares outstanding.
Pre-consolidation?
Yeah, so it's pre-consolidation. So the consolidation will probably happen a week after everything closes. But we just wanted to show the breakdown so we weren't confusing people. So this is what the capitalization looks like post-transaction and financing, but pre-consolidation. And so, what that leaves you with is a implied basic market cap of about 120 million Canadian. And if you look on the right here, you can see the ownership split, which is all outlined in the press release. Pre-financing is 35% MPM and 65% Integra. And then post-financing, you can see it on the far right, is 46% Integra, 24% MPM, and about 30% of holders that'll be buying in the new financing. And that includes, what we're very excited about is that strategic investment by Wheaton Precious Metals of $10.5 million Canadian, which gets them to 9.9 of the pro forma company. And, we were surprised. I guess maybe we shouldn't have been surprised, but I was the one who was handling the whole process of dealing with all the royalty and streaming providers. And we, went out just to sort of canvass the street and see what kind of interest there would be. And we had literally everyone at the table. And we had probably 4 or 5 of them in the data room, gone through everything. And we had terms from, 2, 3 of the top companies in the sector. I won't name names, but you guys can go through the list and I think you'll be able to understand pretty quickly who it is. But, what that does is provide us really good project and strategy validation, but it also, we know now how competitive financing these projects are, and that's based on the scarcity value. There just is not that many real projects in the US that are ever going to get built into mines, and now we have 3 of them. And so, we saw that in the process to speak to the streaming and royalty providers, because it was incredibly competitive, and we had offers from several of them.
So Wheaton is obviously a streaming company, and they made this strategic investment, but going forward, as you're starting to look at financing for various projects, what kind of relationship do you see with them? Have you guys discussed that yet, or have you not really talked past this?
So it's all going to be outlined. Like, we're going to sign an investor rights agreement with them. But they're like, look, the simple way to put it is they only make money outside of the equity. They're only going to make $1 off us or off our projects if these projects get built and put into production. So, you can kind of understand strategically why they're here and what they're going to help us do. They want to see these projects get advanced and put into production, and they want to be a part of a financing package to do that. And so, that's going to be the relationship. I'm sure there's going to be ongoing meetings. We're going to work with them, keep them updated, and they want to support the company going forward, and they want to support the project going forward, so we can build and pour some gold, and so they can either be involved in whether it be a stream, a royalty, or a prepay or something along those lines. That realistically, any project that's going to get built is going to have those sort of financing components to them. So we're thrilled. We're proud to have them as our partners, and we think not only does it provide the project validation, but it's also that pathway to project financing.
So, and Jason, another question from an analyst standpoint. How has this been received by analysts? Have you seen any new reports generated on concerning the merger and what they feel the new valuation is going forward?
Yeah, so I'm not sure if I sent it to you, but PI put out a really good one. And so I can send it over to you. You can send it around to people on the call. So one of the things that kind of sucks about working with some of our close brokers is that until our financial advisor was Stifel GMP, Cormark was on for Integra, and then BMO, Raymond James, and Cormark put together the bought deal financing. And so all of those brokers, because they're involved in the transaction, are restricted from writing research. So we're going to have to wait to get those updates. But they were all of them were involved in the transaction, all very supportive. And we've done the rounds this week at PDAC and last week at BMO, and the street loves it, the industry loves it, and as soon as this thing closes, then they'll be able to write all their research to support it and support the thesis. But PI was one of the few that wasn't involved in the financing or the M&A, and so they put out a great report by Phil Kerr, and so I can send that over to you, and it says everything that we love it to say, which is this is something that the industry needs, and these are two parties with great assets who are going to take advantage of first mover advantage, and the message is we're not stopping here, right? We want to get this closed. We want to get key messaging and news out through to the rest of the year and achieve some of those key catalysts at our assets. And if we can get a bit of a market here, we'd like to go and continue the M&A and find more stranded projects that can't find financing, and bring them under the umbrella. And we want to create that go-to roll-up vehicle of oxide gold projects in the Great Basin.
So what does it leave you with from a cash standpoint when the dust settles?
So when the dust settles, we'll have about 40 million and change. So enough to get us through all of our key catalysts. And again, like the PEA work and all of our resource work has basically already been done, and most of the spend's already happened. Mm-hmm. So the big spend this year is mostly on permitting, environmental work, everything we need to get Integra's key asset Delamar into the permitting pipeline, and we'll have that submitted by the end of the year.
Great. And then one last question on institutional holdings. So obviously there's overlap between the institutional shareholders for Integra versus Millennial. So again, when the dust settles on that, do you think there's a commitment to take bigger positions from them? What, or would they have to lighten their position because they have too much? What are your thoughts on that?
No. So anyone that through the strategic wall crossing, we talked to most of our shareholders. 99% of them are writing checks on this. Yeah. And the check size that they wrote in the financing was to keep them below 9.9. So everyone wrote a check, and from an institutional standpoint, like, we're covered. we're good. We've got everyone in the name that we need right now, and I think naturally, as the story grows, the assets get de-risked, and maybe we can look to approach some of those like bigger funds, like the BlackRocks, Mackenzie's, Fidelity's. So there's an opportunity to grow the institutional shareholding there. But I think given the size of the company, we're really happy to be owned 50% by the top institutions in the world that play this space.
Yep, absolutely. Okay. Nothing. Yep. Perfect.
Perfect. So again, I'm not going to spend a whole lot of time at the asset level. I think the goal, I'd rather get to the question and answer period quicker so we can just more discuss the transaction. But this is Delamar is Integra's key asset. As you can see, it's in Idaho, just outside of Boise. 100% owned, former Kinross asset, former producer. They put out a pre-feasibility study last year, and it's a real project, 140,000 ounces of production per year at sub 850 AISC. And you see a total defined resource of 2.6 million ounces of gold, 126 million ounces of silver. We looked at basically every project in the US, and this was one of the few that we couldn't poke holes in. This is a real project. This is going to be a mine, and that's why that forms the crux of why this transaction came together. There's very few of these, and we're happy to have that in our portfolio now. And again, you can go through the detail. There's technical reports and pre-feasibility studies filed. So they've done a lot more work, and they spent a lot more money on advancing Delamar than we have at Wildcat and Mountain View, and so that's why it's first in line. But then, like I said, we're going to take advantage from the excellent team that they've put together and been able to benefit from that when we shift the focus back to Wildcat and Mountain View.
Yeah, and that's a low all-in sustaining cost. Do you know what the Capex is going to be? Pretty low on that too.
Yeah, again, I think it's like 280 million.
Mm-hmm.
And it's heap leach focus, oxide only. And again, that sort of takes me to the next slide here, which is, when Integra was looking at developing this initially, they were contemplating a heap leach project and then moving to a milling operation. And this was back before the market was allergic to Capex and people just wanted to see bigger. Right now, people want to see small Capex, stage development. And so unfortunately, the market turned right as Integra put this out. So, the oxide ounces are what we're going to focus on. The sulfide ounces are still there. And, the sulfide ounces are going to be very attractive for a bigger company one day because, while there's additional Capex that's involved in surfacing value from those, there's a lot of ounces, right? There's over 2 million ounces of gold here. And the current strategy and the strategy going forward is going to be on the heap leach only project. As you can see here, right, it's 8-year life of mine, $814 AISC. And you're a $315 million NPV, 33% IRR, 2-year payback. I don't care who you talk to, that's a great project. And the thing we love about Delamar is this. So there is huge potential to add life of mine extension, and whether that comes at the front or back of the mine life, again, we need to do a bit more optimization work to better understand that. We got to drill it and do met work and do all that stuff, but we know those ounces are there, and that's low grade stockpiles that have already been mined, and it was basically waste because back when Kinross was mining these ounces, the gold price was lower, so the cutoff was lower. And so the great thing is, and this is one of the key catalysts that we're going to show the market coming out of May, June, is a new updated resource for Delamar that includes these stockpiles. And we see line of sight to, adding several 100,000 ounces of poured gold, which adds several $100 million of NAV. And so, we see line of sight to growing the net asset value at this project and growing the mine life, adding several years and adding several $100 million. So you've got a combined NAV of over, $500 million. So this is a real project. And when you look at the value of this project versus Mountain View and Wildcat, it starts to give you a sense of why, at market, at a 65-35 split, this makes a lot of sense. And for anyone that's followed Integra, a couple of years ago, this was a $200-300 million company. So they got hit hard, and as a lot of companies have in the market, and we've fallen victim to that too. And that's why again, when you have the opportunity to combine companies at this stage of the market, Integra is not buying Millennial, and Millennial is not selling to Integra. This is a combination at the bottom of the market where the relative valuations line up, and it creates, 1 + 1 = 3 transaction for both sets of shareholders.
Yeah, absolutely.
So again here, I'm not going to spend too much time on Wildcat and Mountain View. You guys know the projects, but it's, what we love about Wildcat is it's near surface oxide ounces, the lowest strip ratio you'll see in Nevada. And, we've talked about it at length before. And, the great part about these projects is that they've only ever been drilled on a notice of intent. So 5 acres. We submitted the exploration plan of operations of both Wildcat and Mountain View last year. We expect to receive them this year, which is going to give us 400 acres of disturbance so we can actually go and drill these projects. One of the key selling points of this whole transaction is we see 1 million ounces of near surface oxide material that we can add across the portfolio. And that means doubling the resource at Wildcat and Mountain View. So again, Mountain View, the way we think of them is one project. They're 50 kilometers apart. We're going to develop them in tandem. Wildcat's going to come online first because no strip, no waste rock. So it's an easier permitting process. And then you'd bring on Mountain View 2 years later. And again, you'll be able to harvest some cash flow, use that to offset your development and upfront Capex, and therefore increase your returns. This is what we love, and this is what sort of brings me back to what I was saying earlier is when you put the companies together and the assets together, you've got this portfolio that has assets at different stages. And that's the best part because none of the assets are fighting for capital or for people, right? You've got Delamar, which by the end of this year will be submitting for its mine plan of operations. And, then as we say, the team is going to shift their focus to Wildcat and Mountain View. And it doesn't delay any of the key catalysts or any of the advancement at Wildcat and Mountain View. We always promise the mineral resource update and PEA by middle of this year. We will get that out. It lines up with the mineral resource update at Delamar as well. And, if you take a step back, and again, why I like this as a shareholder is that, here we are right here, and we're trading at 0.1 times PNAV, right? And the market sucks, and this is just the reality. But we're combining two companies that are trading at the same level. So you're not losing on either end of it. And what we know and what we've seen is when you get to this record decision, when you get permitted ounces, you're going to trade at 0.8 to 0.9 times your NAV, right? And right now, let's say we're sitting 315 million at Delamar, and by the time you get to these record decisions, you're going to have $800 million, what we think of NAV between Delamar, Wildcat, and Mountain View, right? So you guys can do the math, right? We're going to be a $120 million company, and by the time we get these record of decisions, there's no reason why this cannot grow to be $300, $400, $500, $600 million company. And so that's the vision for us. And then once you can get these into production, it's well north of $1 billion. But, we see in the next 3 years, the ability to significantly add value and increase the value of the company because you're going to be, by the end of next year, over 7 million ounces of gold equivalent in the Great Basin. And by the end of, or by mid 2026, you're going to have 2 records of decisions to get Delamar and Wildcat into production. And that is going to generate hundreds of millions of dollars of value along the way. So, what we're telling investors is, look, if you're looking for a quick flip between this year and next year, maybe this isn't the name, but if you're looking for a 10 times return over the next 3 years, that's something that we're confident that we can get into a pipeline to achieve, because there's lots of companies that we use as comps. And again, we've got the assets now to advance to get that re-rate. And so anyways, we're very excited about it. And we've got a portfolio now that we can build on and that we can really surface value with. So to take that a step further, you can see where we come out with out of the end of the transaction here about $100 million US market cap. You can see where Liberty is, which is another phenomenal company. They've got great assets, but they're at that scale there really isn't too many other companies. And by putting the two companies together, you leapfrog into that pole position. When you look at the total resource on a combined basis out of the gate, you're over 6 million ounces, 3.5 million of oxide heap leachable material. And we see the ability to immediately in the next year grow that by 1 million ounces. And then all of a sudden you're at the top of the food chain in the US, focused on precious metals exploration and development in the Great Basin. So you create that scale, that significance, that relevance to become the go-to developer in the US. When you look at the relative position versus junior gold producers, while we're going to be here as a developer, you look at where we want to be from a production portfolio, or sort of from a production profile, we see line of sight to get you north of 220, 230,000 ounces of production. When you look at, this bucket of companies, Argonaut, Calibre, K92, right, you're up to over $1 billion, right, of value. And so that's where we're taking this. That's the vision. And we see several stage gates to re-rate, and that's resource update at Delamar, Mountain View, and Wildcat and PEA this year. Next year, mining permit, and we'll go back and again show the updated resource and an updated PFS at Wildcat and Mountain View to again show you the economics behind this, and we'll show you on a combined basis production profile that's going to push over 200,000 ounces in the US. And we think that's very unique, very rare these days. And what we're trying to do is recreate what Orla did back in 2018. And we feel like we're at that stage now, and we've got a pipeline to grow this to $1 billion company.
Great. Couple questions. Many mine permitted companies are experiencing significant Capex increases due to construction and operating cost overruns that are much higher than were estimated on their feasibility studies. Does this PEAs and feasibility studies, does Integra have a large contingency fund? If you get the Delamar mine permit by year end, when would construction be finished? And he mentions that George previously said he's not planning to build a mine. Instead, he wanted to sell Integra. If he does, then Wildcat and Mountain View is not fully valued.
Well, there's a lot of questions there.
Yeah.
I think, first, the reason why we're focused on these assets, because it's low Capex. These are the least susceptible to inflation. These are the simplest projects to build. I think you're already starting to see cost normalization. Like last year, you couldn't find a drill in Nevada. Now we've got drilling companies calling us. So at some point, the world's going to normalize and costs are going to creep back down to normal levels. And, we're moving ahead, assuming costs stay where they are right now. We see projects that are fully financeable and buildable. And we have the team and resources and people to do that. I can't speak to what George has said in the past, but what I'll tell you is Integra 3.0, including Millennial, we want to build these projects. We want to advance them to a development decision. And if, we can't control if someone wants to make an offer to buy these projects, but I would argue that by the end of next year or the year after, like I was saying, right, we're going to be able to see significant re-rating through the advancement. And anyone that would want to buy the company at that stage would have to pay full value for the stage of the assets at that time, which, in our view is several $100 million more than where we're valued right now.
Yeah, absolutely. Going forward, if the market doesn't re-rate to a better PNAV, is there an option to do a royalty or streaming deal with Wheaton versus equity financing?
That's why we have them at the table. So yes, that's why they're here. And that's, again, as I mentioned, the only way they make money is if we pour gold. So it's, 100% their intention to help support us to do that. And we also have key shareholders who will help support us get that done as well, right? And, even in the process of putting this transaction together, we talked to a lot of strategic private equity funds. We talked to other companies. So there's lots of different avenues we can go to advance these assets without issuing equity at these levels. I mean, I think the whole industry is in for a world of hurt if things stay the way they are for the next 2 or 3 years. I don't think they will.
No.
It was funny. I was talking to a trader yesterday, and he was saying the volumes across all the major exchanges globally are 1/10 of what they are in a normal market right now. So it just shows you that we are dragging along the bottom here. And at some point, when the rate increases stop, when the US dollar trades off, gold's going to skyrocket, and then money is going to flow into this sector like you've never seen before. So again, I hope it doesn't take another 2 or 3 years. I certainly don't think it will, but we feel like we're well positioned to again advance these assets regardless of what the market does.
I agree. And we've seen this cycle happen a lot. And, the stocks trade down at these levels. And then, when things take off, everybody wishes that they were buying down at these levels, and they're all end up chasing.
Exactly.
And the exploration companies, they're always the last to make that big move upward. So I agree with you. As soon as we stop raising rates and we get some normalcy, gold should really take off.
If it doesn't, then I think we're all going to have to find new hobbies.
Exactly.
So this is a big slide for us. This is, what this finance and transaction gets you. And this is all within the next 12 months. And so, the big thing is right out of the gate, as soon as the transaction closes, within a month, we're going to get the updated resource estimate, including the stockpiles out at Delamar. And then by the end of the year, the mining plan of operations will be submitted. Same thing, no change in the timelines on Wildcat and Mountain View, updated resource and PEA this year. And then across the portfolio, drilling and updated, and resource growth potential across Delamar, Wildcat, Mountain View, permit advancement and engineering, at Delamar to get it into a place that we can make a production decision. So we're very excited. We're fully funded to achieve all this. And we're excited to deliver this once we can get this transaction closed up. So I'll just wrap up quick, and I have, 10 minutes at the end for questions. But again, I think the 5 key bullets that if, you leave thinking about is, to set the stage is we are laying the foundation to become a leading precious metals producer in the US. And what we think this transaction gives both investors of Millennial and Integra is scale, relevance, a robust pipeline, right out of the gate. You're the largest exploration and development company focused in the Great Basin with a pipeline of projects that'll give you the potential to produce over 200,000 ounces a year, industry-leading growth profile through that stage development strategy. You've got a phenomenal team on both sides. We're super excited to work with the team at Integra, and financial strength backed by Wheaton, BD, and some of the top mining investors in the world. And so we're excited about it. There's a lot of hard work and thought went into it. And we think, putting these companies together at this time secures the best assets, the best people, and creates a level of relevance and scale that positions investors best for when the market does turn.
Great. I think that at this point, we're going to open it up for Q&A. It's obviously clear that the merger is going to benefit both companies and create a company with a really diverse portfolio of projects. If anyone has any questions, type them into the Q&A or chat box, and we'll make sure that they get answered. Hey, Jason, is there any are there any differences in permitting between Idaho and Nevada, or is it pretty much the same?
There's
time frame?
some nuanced differences, but it's like you're still dealing with BLM offices in the US, right? It's not overly different. And the best part is the permitting team at in Integra actually cut their teeth permitting mines and building mines in Nevada.
Mm-hmm.
So we've got experts on both state lines, which is great. And again, it's people that if we didn't do this transaction, Millennial would have had to go ahead and hire. And I didn't speak on it in the slides, but the result of putting the companies together is you're going to get $2.5–3 million a year of corporate G&A savings, and that's not assuming we would have to go out and hire a team. So it's actually, in theory, more than that. But immediately out of the gate, combining the companies, you're going to be able to put $2–3 million more into the ground and use that to advance the projects.
Great, thank you. At this valuation, wouldn't it have been more accretive to do a royalty deal with Wheaton versus financing convertible debt?
So the reality is we could have done a royalty deal, but it only would have covered a portion of what we need to really advance these projects, right? Depends on what we would have gotten, and maybe we could, but you're essentially selling a royalty on a mine plan now, which sure, it may have netted you $10 or $15 million, but the benefit to doing this and putting these two companies together and securing the team and assets now is that we can wait to do the royalty financing once we've got the updated drilling and resource at Wildcat and Mountain View, which means you're going to get a royalty that's going to essentially be 2 times the value, right? So for us, we have all these people here, investors, Wheaton, ready to do a deal now. We'll still do the royalty at some point. And that's going to offset equity dilution down the road. But we thought it would be prudent to advance the assets more so that they're at a higher valuation, more ounces, bigger mine plan. So when you sell the royalty, you get a much larger upfront cash inflow to pro forma Integra.
Yeah, absolutely. Thanks for that. And so, can you go a little bit more in depth? You talked about it earlier about looking at new M&A opportunities
Sure.
or potentially divesting some of your assets. Obviously, you talked about possibly doing like a JV or something like that. But are there other projects out there that make sense to pick up at this point that you've seen? There
are. I don't think we'll do anything until we get the share price, the currency up. But we're always looking, and we always have been looking, and Integra is doing the same. And so between the two teams, we've looked at basically every project in that part of the United States. And so we've got our hit list. And if we do get a currency, and when we get a currency, we will go and continue to tuck in projects. But I would say that probably won't happen for another 6 months to a year. Right? Like, we're fully funded now to get those key catalysts over the line that we need to drive the share price and wait for, a little bit of a market tailwind. But there's lots of other marginal projects that, have the potential to produce 40,000–50,000 ounces that we would love to tuck in. And the best part about this deal is you're securing 2 of the top projects that have the potential to produce 100,000 ounces a year separately. Plus, there's not too many of those. There's a lot more of the smaller, more marginal projects, and so that would be where we would look. I think there's not too many of the more chunky assets available. So we're looking. We've always been looking. We've got our list, and when the time's right, we'll be ready to do so. And I would say on the exploration portfolio, that's something that we would look to sort of move on a little bit sooner. And again, I think that's going to be a big focus of mine as soon as we get the deal closed, is finding a creative solution to surface value from those projects which you see no value for in the share price, right? And I think the biggest drivers for the share price now are going to be Delamar, Wildcat, and Mountain View. So we're going to look to do something, whether we bundle them up and do a JV, something like that. This is something we're going to look at again over the next few months. But the work doesn't stop there. It's going to continue on in the background. The focus will be Delamar, Wildcat, and Mountain View. But again, you get the rest of the portfolio essentially for free.
Yeah, absolutely. And then I'm assuming that the acquisitions you're looking at are all in the Great Basin area, correct?
Yeah, I think that's where we want to be, especially now with the scale we've created there. And you're always going to trade at a multiple to, a more risky jurisdiction. And I think it fits our strategy, especially with taking advantage of synergies and working in the same jurisdictions, team sharing, equipment sharing, all that.
Yeah.
It works if you're all in the same place. And so and it helps being able to fly in easy, like we always say at Mountain View, you can order a pizza to the mine site, and that all helps, right? It all makes working with several assets at once a lot easier.
Yeah, absolutely. Let's see here. So, are there any other major players in that Great Basin area that might make sense once this deal closes to acquire Integra? I mean, who are some of the big players in the Great Basin area that might take a look at this project now in its entirety and say, this might be a great acquisition for us?
I mean, again, I don't really want to name names, but we've had CAs signed. We've been in discussions with some of the largest gold and silver producers globally, and a lot of them have operations in the US. I mean, I don't know if Barrick's going to try and buy us, but I could see, some of the smaller, more mid-tier producers that need, that have operations in more risky jurisdictions. I could see them wanting to add $500, $600, $700, $800 million dollars worth of NAV in the US. That's a game changer, right? So that's, again, I don't know who's going to want to buy us at some point, and it wouldn't be a good strategy just to wait around to get bought. So we're moving all the assets ahead to get them into a permitting pipeline and get them to a point where you can make a production decision. Because at that point, if someone does buy you, they're going to have to pay up, right? And we're talking about 0.1 times NAV right now versus, 1 times NAV, 0.8, 0.9 times NAV, what you've seen on unprecedented transactions in this part of the world. And so that's 10 times return between 0.1 and 1.0, right?
Yeah, absolutely. And like I mentioned earlier, now is the time to be looking at these companies with these valuation, company like Integra, Millennial, with this kind of valuation. It really makes a lot of sense because gold will have its day, and I think it's going to be sooner than later. I think we're going to leave it there. I want to thank Jason Banducci for coming on and getting us up to speed on the merger with Integra. Obviously a game changer for both companies and shareholders too. As usual, Jason, before I wrap it up, I'd like to give you an opportunity for some parting words for our guests.
Sure. Thanks, Anthony. And again, thanks for everyone that joined the call. We're really excited about this transaction. As I said, I put companies together for the last 5 years, and this one's got me the most excited. There's real synergies. There's real benefit to both Millennial and Integra shareholders in putting these companies together. We believe it's going to create the go-to exploration and development name in the Great Basin. And, in the next couple of years, create the go-to US focused gold and silver producer. And so we're excited about it. We hope you guys are excited about it. And, if there's any other questions, we pride ourselves of being available at any time. And so feel free to send me an email or book a meeting with myself or the CEO, Jason Kosick, through our website. And we look forward to continue to update you. As I mentioned, the transaction is going to close end of April, early May, and in June, we're going to come out with 3 huge catalysts, which we think are going to be a game changer for the combined company.
Yeah, absolutely. In the meantime, you can get additional information on Millennial Precious Metals at the company's website, millennialpreciousmetals.com, including details on the merger, where you can see this presentation that Jason showed us today.